In this video, we'll be looking at the concept of gold contango under Module 6 on foreign exchange and commodity risk management. Now, gold is a precious metal commodity and is usually measured in troy ounces, or in its code is XAU. And the price is typically stated as cost of 1 ounce in US dollars. So for example, if there is a pair XAU/USD 450, it means that 1 troy ounce is equals to US dollars $450. Now, of course, demand for gold depends on changes in investment levels as well as physical manufacturing demand. Now, there's a concept called gold contango, and where the gold market is usually in contango. Recall that contango means that the futures price or forward price is greater than the current spot price. So large amounts of gold are held by central banks, and the central banks leases the gold to bullion banks, and the rate at which they lend gold is in the range of 0 to 4%, and we call this the lease rate. So gold contango is equals to the current cash interest rate minus the gold lease rate. Now let's see how it works. Now let's take the example of Sunrise Gold, which is a gold mining company in Australia, and the spot gold price has risen to 1,600 Aussie dollars per ounce, and Sunrise Gold Mining decides to hedge 5,000 ounces to be delivered in 12 months' time. Now the market is quoting the following rates. The spot price of gold is 1,600 Aussie dollars per ounce. The Australian 12-month interest rate is 6%. The 12-month gold lease rate is 1%, and the bank's profit margin is 0.5%. So Sunrise Gold Mining advises its bullion bank that it wishes to sell 5,000 ounces forward for 12 months at the current market price. Now, so in this case, we have Sunrise Gold Mining, we have bullion bank, okay, and then of course there's also the capital market, the spot market, as well as the central bank. And Sunrise Gold Mining wants to hedge against falling gold price 1 year from now. So the bullion banks handle transactions in gold, and the depositories store and protect the actual bullion. So what Sunrise will first do is that it will enter into a forward transaction to sell 5,000 ounces of gold forward 12 months. And it will enter into this forward contract with the bullion bank. So the bullion bank today will then borrow 5,000 ounces of gold from the central bank, of course at a lease rate of 1%. Then with the gold that they borrowed, they will then sell it to the spot market at a spot price of 1,600 Aussie dollars per ounce, and they will get 8 million Aussie dollars in cash from the sale of the gold. And this money will then be invested in the capital market at the cash interest rate of 6% per annum. So based on this information today, the bullion bank will then be able to compute the amount payable to Sunrise 1 year from now. Let's see how much that is. So from the start, we knew that, okay, at the spot price, okay, the amount raised would be 8 million Aussie dollars. And from the 6% interest, that would be 480,000, which is 6% of $8 million. And the lease fee payable to the central bank will be 1% of the spot value, which is 8 million times 1%, that's 80,000. And to the bank, of course, they will have to earn a margin, and the margin is 0.5% of $8 million, that's 40,000. So when we take 8 million plus 480,000 minus 80,000 minus 40,000, we'll get 8.36 million. So that's how much the amount that's payable to Sunrise will be 1 year from now. And this amount is already known to Sunrise today. Right, assuming that 1 year later, if everything goes well, there's no counterparty risk or no default, the bullion bank will then receive the principal amount, $8 million, plus the interest of 480,000 from the capital market. Sunrise Gold Mining will then deliver 5,000 ounces of gold to the bullion bank and receive a payment of 8.36 million Aussie dollars, which is the amount guaranteed from the inception. And the bullion bank will then deliver 5,000 ounces of gold to the central bank, plus the lease fee of 80,000 Aussie dollars. So that ends the transaction. So what's the effective gold price obtained by Sunrise Gold Mining in this case? that will be 8.36 million divided by 5,000 ounces, which comes up to about 1,672 Aussie dollars per ounce. And this amount is known from the inception. Now, in this case, what's the gold contango? The gold contango is 6%, which is the cash interest rate minus the lease fee rate, which is 1%. So the gold contango is 6% minus 1%, which is 5%. So that ends the session on gold contango.